Hey everybody, it's Chris Gorman again with Gorman Residential. Thanks for joining. Today I'm going to be talking mortgages with Matt Valentine from Cornerstone Lending. Matt's a good friend of mine and also a business partner, so stay tuned for some great Q&A about mortgages.
Hey!
All right, thanks Matt for that entrance. So just a few questions, some conversational questions about lending in today's world. The first of which is there's a lot of advertisements for online lenders today, like Rocket Mortgage associated with Quicken Loans. I'm sure there's others out there. What's the difference? Why would somebody choose to go with them versus someone like you? What are the pros and cons?
Yeah, good question. There's definitely a big push right now for by the online marketers, the lenders like Quicken and those kind of people who have gradually transitioned out of the refinance market into the purchase market. And that's not necessarily by choice, but by necessity. With rates going up over time, the refinance have somewhat dried up. So where they have made their living that way, now they're coming into the purchase realm. So you're seeing more and more of the Quickens, the Rocket Mortgages.
So they're just buying up airspace to capture market share.
Correct, yeah.
So are there any consumer risks? I mean, is going with somebody like them versus a mortgage broker like yourself that's local, are there any differences to that?
Yeah, a lot of big differences. With the refinance, this timeline was nothing. You could take 30 days, you could take 60 days to do a refinance. There was nothing pressing you to get it done. With a purchase, it's different. You've got due diligence dates, you've got closing dates that we need to make sure that we're hitting those. So one of the major differences, a few of the major differences actually, is going to be service level, what you receive from my team or local lenders, and also locale. So decision making being made here in the Raleigh market, where you're buying, by people that know, live, work, love the market. And then the third is just communication and making sure everyone's in the loop, and that helps to hit the closing dates on time.
I'm putting you on the spot here, but do you happen to know of any like fallout ratio statistics from those types of folks?
I don't.
Okay.
I know I've bailed a couple out. That
I can say from my experience working with some of those folks that for some reasons deals tend to fall apart at a little bit higher rate, but we don't have any stats to back that up.
Yeah, no stats.
Some
of that's just, they jump in and they're so quick to give a rate without doing the proper review up front. And sometimes it's just a credit pool and say, oh, well, here's what I'll give you, rather than jumping in, looking at options, making sure that we're putting the client in a mortgage that works for them here presently, but also in the future.
Got it. So along the same lines, besides rate, because everybody wants to talk rates, and most educated consumers know that there's a lot more behind that number than just the number itself. There's points, there's all sorts of things. So besides rate, what is the next most important thing to consider when selecting a mortgage broker or lender?
Yeah, good question. I would say local decision making. And a lot of times this is overlooked, and people don't take the time to understand what this means to them and how it plays out. But buying a home is a huge decision, and for a lot of people, they dread it. They dread the mortgage process because maybe they went to an online lender and had a horrible experience. But it doesn't have to be that way. When you have local processing, local underwriting, local closing, local appraisers that are all hand-selected, best of the best, these are all knowledgeable professionals that take pride in what they do, and they're here to make this process as smooth as possible. It doesn't mean that it's not going to be uncomfortable. Anytime someone's digging into your personal financial information, it always can be uncomfortable.
Yeah.
But the bothering you with, hey, I need this, hey, I need this.
So when you say local, one of the roles that most people have heard of is the underwriter, and that's what's an underwriter do?
Underwriter is going to review the file to the guidelines and make sure that it fits and actually issue the approval.
So they're like the red light, green light.
They are the red light, green light.
The go or no go decision.
Yeah.
So if your underwriter is, if you're in Raleigh and your underwriter is, let's say, in Chicago versus in your office, might that make a difference?
Yeah, absolutely. If someone's in Chicago looking at a Raleigh market and they don't understand what's going on, they're going to review the appraisal as well. And if the appraisal has come in high, they might go back and ask for a revision or do something like that. But yeah, just having them in the office is great, because even at the pre-approval stage, when your clients come to us, we can walk down the hall. If it's something that's got some gray area, then we talk to them. We say, hey, what do you think about this? Can we make this work?
Response time, continuity. Yes. I mean, walking down the hall and asking a question versus waiting on a call back from somebody in a different time zone.
Yeah, and some companies won't even allow you to contact the underwriter.
All right, so last question, loaded question. Where's the market going to go, the mortgage market, in relation to the real estate market? But, that's a separate but related issue. But what's going to happen, I guess, this next year or two with rates and everything?
Yes, I mean, rates have been one of those things where it's moved a lot over recently, sometimes up and then sometimes back down. I think we're going to see a lot of that same path where it's going to stay relatively flat. You're going to have some peaks and some valleys.
How much does it matter?
Not a ton. I mean, if we go up 1/8 of a percentage point, 1/4 of a percentage point, you may be talking about $10, $15 a month on your mortgage, depending on how much your loan amount is.
Right.
I would say it matters from the pre-qual to take a look at it and try to project out what you think you're going to be at and qualify them on the higher rate. Because if you've got someone that's on a 6 to 8 month time period and they're just squeaking by with a pre-approval right now at 4.375 and the market moves to 4.75, then you could have issues where they were qualified before, now they're not qualified. So
interesting.
So watching that, kind of studying it and keeping an eye on things is definitely worth doing. But I would say we're going to stay relatively flat for the rest of the year. And
in the grand scheme of things, where rates have been historically, I mean, they're still at record lows.
Yeah, we're still real low.
So everybody gets into a fit about rising interest rates when in fact they're still very, very low compared to where they have been. So
absolutely.
All right. Well, thanks, Matt, and thank you guys for watching. Hope this was informative for you. If you have any follow-up questions, comment, post below. I'll get Matt to answer those questions. Obviously, if you have any real estate related questions, I'd love to help you. You can always reach me at 919-670-3005 or Chris at GormanResidential.com. Thanks and have a great day.